what's going on with Nvidia, and more specifically Nvidia stock, because the stock itself, let's be honest, of course, in the long term, the stock has been outperforming and then some. But more recently, the moves have not been great, right? The moves have not been great. Of course, since the lows at the start of August, right, when it went under $100, the stock has performed quite well. It's up over 40% or so. But more recently, we've had the headlines, of course, of Blackwell delays, overheating issues, super investors selling their shares in Nvidia, etc., etc. And then more recently today, we actually covered the Dell earnings and the comments that were made during the earnings call. And it does seem like Blackwell is in part delayed. Otherwise, well, Dell would have reported probably better guidance, or their comments during the call would have been a bit better than what was said during that call. Same with SMCI. SMCI, same thing. They also made comments about Blackwell, how they are calling Nvidia each and every day to see what's going on. So let's discuss all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Nvidia stock, as you can see in the last month, the stock is down 4.3% or so, where the overall market has been up. But of course, year to date, there's no denying, even year on year, this stock has done tremendously well, over 170%, and year on year, over 183%. But yes, it's true that even in the last 3 months, this stock has been underperforming a little bit. So is it because this stock has gone up just a tremendous amount in the last couple of years, and now we don't know, we meaning the market doesn't really know what's going to happen in, well, 2026? Because we know 2025 demand is still there, demand is still bigger than supply. But after that, is that why the market is now in a sort of, okay, Nvidia is a tremendous company generating billions and billions of free cash flow, but maybe currently at $3.3 trillion, a forward PE of 34.3 times, maybe now, and actually EV to sales 18.5 times, maybe now we are taking a step back and, well, we will wait. We will see what happens with Nvidia. If it goes up, if it continues to outperform, if Blackwell truly is, well, insane, demand there is staggering, Hopper continues to ramp up as well, then okay, fine, no problem. Then we'll start adding again and again. But right now, it does seem like the market has a lot of questions, and a lot of those questions are remaining unanswered. So let's dive a little bit deeper. Now, with all that said, right, with all the headlines and the stock not really moving much, the average analyst price target sits close to 26% higher than the price we're at today. It sits at $170. Looking at some pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow. Price to free cash flow is in the last 12 months though, so keep that in mind. All of them here, except for price to sales, is still under the 5-year mean, despite the stock going up a tremendous amount in the last 5 years. And if we look at price earnings to growth, it's under 1, which means by definition, it's undervalued, which is crazy, right? And here we can basically see what the market, what the analysts are expecting this company to do. So we've got the yellow line here, well, the yellow bars, that's free cash flow. Free cash flow is expected to grow, well, 45.4% in fiscal 2026, and another 31.2% in fiscal 2027, reaching $122.7 billion in free cash flow. That's the expectations for Nvidia in fiscal 2027 to generate $122.7 billion in free cash flow when revenues sits at $234 billion. My question here is, other than paying a silly small dividend, buying back a ton of shares, what are they going to do with all that cash, right? I mean, they could be buying companies, right? Maybe they'll try ARM again under Trump, but I highly doubt that's going to work. So I guess they'll have to buy smaller companies or, I don't know, Intel? Nah, I don't think that will happen. But still, this is a company that will have a tremendous amount of cash, and I don't know if they know what they will be doing with it. Now, of course, how do they reach that point? Well, they've reached that point because of this purple bar right here. That's the data center revenue. Data center revenue since January, well, since 2019, has grown by 3,242%. Back then, it was generating less than $3 billion. In the last 12 months, it has generated over $98 billion. That's insane. And as you can see right here, it's now by far their biggest segments, right? Before, well, actually, we would have to go back to before Q4 fiscal year 2023. Gaming was bigger than data center. But of course, since then, since that switch, since that ChatGPT moment, that has completely flipped. Now, what's interesting here is that since Q2 fiscal year 2024, and I'm sure most of you have seen this already, this part of the business, the revenue here, always jumped by $4 billion. Each and every quarter, $4 billion extra and extra and extra. So maybe that's what they mean when they say, look, demand is not an issue, supply is. So maybe they only get $4 billion extra out of TSMC's factory each and every quarter. Now, will that change? Probably, because we know that TSMC is going to increase capacity and Nvidia gets, well, a big part of that increase. So yeah, maybe we're going to see finally bigger jumps than $4 billion. Now, what was mentioned in Nvidia's earnings call was this, that total revenue next quarter is expected to be $37.5 billion, which is an increase of $2.5 billion from this quarter. The market was expecting a little bit more than that. But I say here, we are on track to exceed our previous Blackwell revenue estimate by several $billion as our visibility into supply continues to increase. And so now that this was mentioned, they really have to deliver. They have to exceed that $37.5 billion. But as we heard from Dell and SMCI, well, I believe they will have to catch up quite quickly in January. Because Dell said the following, that in Q3 they saw a shift and a pretty rapid shift of the orders moving towards the Blackwell design. The backlog in order for the quarter, without giving you a specific percentage, was a significant portion of the demand and now is a significant portion of the backlog. Say here, we are ready to go, Blackwell is in production, it will continue to ramp and we will be ready. With regards to AI shipments in Q4, same thing here. Blackwell is in production and ramping on our ability to translate that into shipments as well as the existing backlog on Hopper. It's our best indication of what we believe will shift in the quarter, and that's what's reflected. Basically, guidance missed by $1 billion. Lots of questions surrounding that and surrounding Blackwell. Well, more questions here with regards to Blackwell here. AI server revenue being down sequentially next quarter despite the backlog growth in the quarter. What's that all about, etc., etc. So again here, Q3 shifted dramatically towards Blackwell. That product is in ramp and production. We've translated that into our Q4 guidance. And I also asked that question in the Dell video. Are you telling us that those that were interested in Hopper are now just skipping that and going to Blackwell? So what will be happening with the Hopper demand for Nvidia? Is that going to slow down and completely be replaced by Blackwell? These are my questions. I'm not saying this is happening. This is just me asking questions. If you know the answers, let me know down in the comment section below. Then, of course, we had these comments during the SMCI earnings call. Can you kind of double click on which quarter do you think that you will start booking the Blackwell revenue? Last time you guys alluded to something in the June quarter, just curious whether this is still on track. So Charles Yang here said, indeed, we are asking Nvidia every day. So I hope their production can go smooth and go for high volume very soon. So yeah, I guess SMCI and Dell are all waiting on Nvidia. Now, what might be the problem, you ask? Well, a couple of things here. So first of all, like I said previously, Nvidia secures 60% of TSMC's double CoWoS capacity for 2025. The rest goes to AMD and the ASICs guys. Then we've had this, Nvidia working as fast as it can to certify Samsung's AI memory. Samsung had issues and is having issues with regards to, well, catching up to the AI age. Now, right now, that doesn't seem to be solved anytime soon, because Samsung's HBM3E availability remains uncertain for Nvidia's Blackwell, might not be that great for Micron either. And then we've had here the other part, which should be a bit more positive if that is true and if that is happening. Nvidia CEO asked SK Hynix to bring forward supply of HBM4 chips by 6 months. This is according to SK's chairman. So I guess where there is smoke, there is fire, whether it's delays because of Blackwell specifically, because of, well, the memory chips, because of an overheating issue. I guess if you get reports from all sides, then there is certainly something going on. Now, I'm not saying that, oh, it's canceled or there's a big error here. No, delays happen, but of course, if there is a delay, if you're a quarter late, then yes, that will be reflected in the stock. And then lastly, of course, this doesn't help the whole sentiment right now. We've had this come out, Amazon's moonshot plan to rival Nvidia in AI chips. This is Amazon, Annapurna Labs. So the cloud computing giant won't dislodge the incumbent anytime soon, but is hoping to reduce its reliance on the chip maker. It's not a surprise or it's nothing new that these big tech companies are designing their own chips, but their own chips are going to be designed for specific tasks. But yes, who knows, maybe in the future as TSMC grows, as Intel Foundry grows, as Samsung get back on track, then yes, maybe the others can catch up to Nvidia, but like I said, this is going to take years and years. Last two things here, reverse DCF for Nvidia. So to justify today's price, right, if you plug in the free cash flow trailing 12 months, to justify today's price, free cash flow, the implied growth rate there is going to be 17.6% to justify today's price. Is that achievable? I think so. I think with Nvidia's position right now and the way things are looking, I mean, this is certainly achievable. Like we've seen at the start, $122 billion in free cash flow. That's what the market was expecting back in fiscal 2027. And here it's reaching $127 billion in year 5. So we're reaching closer to that number already in year 2.5 or so. So yeah, I don't think it's so far-fetched. Last thing here is the graph. Right now, it does seem like Nvidia stock sits just at the 50-day moving average. Let's see if it can stay above that. It's of course a shorter week because of Thanksgiving. I mean, would investors complain if it retested the 200-day moving average at around 110? I don't think so. RSI is still high, but not overbought or not close to being overbought. Definitely it lost some momentum, but let's see if it can close the week above that 50-day moving average. So overall, that's it. That's what's going on with Nvidia right now. Do share your thoughts and comments down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.